Hello, I'm Annabel Brady-Smith. I'm the Communications Director of the Association of Investment Companies. There's evidence that investors are repositioning their portfolios away from the US in favor of other regions. And President Trump's erratic tariff policy making has focused investors' minds. Could European investment trusts provide an alternative option? Today, we're taking a look at the challenges and opportunities for European investment trusts amid US trade tariff tensions. I'm delighted to be joined by three managers from the European smaller companies sector. Marcel Stotzel, co-manager of Fidelity European Trust, George Cooke, manager of the Montanaro European Smaller Companies Trust, and Jules Bloch, co-manager of JPMorgan European Discovery Trust. Right, on to the questions. How has Trump's presidency and his tariffs in particular impacted attitudes towards investing in Europe? And we're going to start off with Marcel.
Thanks, Annabelle. Yeah, so I would say the first thing is it's taught all of us to expect the unexpected. That's probably one constant that's going to remain with us through the rest of the year. But I think it's had a number of important impacts. Firstly, obviously, tariffs sectors such as autos, such as luxury goods, such as alcoholic beverages, have really found themselves in the crosshairs of potential Trump tariffs. But I think also equally importantly, it's led people to reconsider the notion of US exceptionalism and basically how far the US can push the envelope, given obviously that their end consumer will be the ones who have to pay the tariffs if any pricing gets pushed through into that market. So it's been really a mix of two worlds around that.
Thanks so much, Marcel. Now, George, how has the presidency and the tariffs affected your European Smaller Companies Trust?
Yes, well, luckily, we no longer really need to guess how investors might react because we can see it within the flows. And indeed, we saw record flows moving out of the US and into Europe on the back of Trump's various announcements. I think this underscores for many investors as well just that value of diversification, which had almost been forgotten after years and years of US leadership, and particularly as concentration to US mega caps was becoming ever higher. And I think the final point to point out here is just the valuation differential between the US and Europe, which has been growing for some time, is such that despite that rapid flow out of the US and into Europe, we still think there's plenty of room left to run here for Europe to essentially catch up from an investment perspective with the US.
Thanks, George. So obviously we are seeing reallocation towards Europe. Jules, how has this whole presidency impacted you and attitudes towards Europe?
Yeah, I mean, it's fair to say the election of Donald Trump has introduced a lot of uncertainty and volatility. Now, I think there are good reasons to be more positive on Europe. And one of these reasons is actually this election has been a wake-up call for Europe. I mean, you had the Draghi report at the end of last year, which was already a sharp warning about the need for increased spending, for increased integration in Europe. But it's really the speech of the US Vice President in Munich that was a real turning point. Suddenly, Europe realized they couldn't rely on the US anymore. And this resulted in a very strong reaction in Germany, which decided to abandon fiscal austerity and materially increase fiscal spending. And we think this is an absolute game changer. And this would benefit companies which are European localized, which have business in Europe, such as small caps, especially because the small caps will be less sensitive to tariffs because only 15% of their revenues come from the US.
Great. So actually, in a way, almost a benefit for small caps, this whole issue. What's the outlook for your trust? And I'm going to ask that to George. And actually, 2025.
Yes. Well, it's been encouraging to see so far in 2025 small cap outperforming within Europe. And that certainly bucks a trend that's been in place quite the other way for the last few years. Now, perhaps unsurprisingly as a result of that, we see good upside across the stocks in our portfolio. I think particularly in those sectors that have suffered in the sort of post-COVID environment. I pick out, for example, healthcare there. where we've moved from a case of those companies over-earning in the immediate post-COVID period to now potentially under-earning and offering very good value. I think taking a step back and looking at the small cap asset class, we can see that small caps now trade at a double-digit discount to their larger counterparts is really unprecedented and certainly hasn't been something that we've seen for the last couple of decades. So we think that that small cap effect has a great chance to work quite well over the next 5 or 10 years. I think finally, we're not the only ones to have spotted this. And one trend that we've really seen a pickup in the last 12 to 18 months has been more and more M&A within the portfolio. So even if public equity investors may stay shy and may not want to come in and buy small caps themselves, it seems that private equity and indeed trade buyers will.
Well, that's positive. It's good that people are realizing that there's value there and they're coming in and buying, and hopefully the message is going to be spreading, which it seems to be. Jules, what's the outlook for your trust in 2025?
Yeah, I agree with most of what George said. I mean, we think it's a very attractive time for the JPMorgan European Discovery Trust. First, because valuations today are really cheap. So you get a double discount on European small caps today. Europe is trading at a discount to the US, and then European small caps are trading at a discount to European large caps, which is really unusual because on average, they just provide more growth. The last time it happened was in 2000. If you look at the performance of small cap versus large cap in the following 5 years, it was a really, really good period to be invested in small caps. On top of that, I would repeat, but European smaller companies are more exposed to the European economy. So if you get a boost from increased fiscal spending in Germany, these companies which have more local production will benefit more. And so if we think about the portfolio today, we're very exposed to more domestic businesses, very simple supply chains, which will benefit from increased fiscal spending.
Excellent. Well, let's hope it's like 2000 again and that performance really comes through over the next 5 years. And Marcel, what's the outlook for your trust in 2025?
Yeah, I mean, I would echo what everybody has been saying in terms of, Europe really does have the potential to shine over the next kind of 12 months. The only thing I would counteract is, potential tariff and, if that pushes the US into recession, whether or not, Europe is selling directly into the US, and those sectors will have a knock-on impact. So balancing those two, is tricky, and we try to remain broadly balanced and focus on stock picking. But beyond that, beyond these short-term headwinds, hopefully, which are short-term around tariffs and around secondary, third-order impacts, I do think we do believe that, the long-term structural changes that the US has kind of pushed on or kind of encouraged Europe to adopt will last far beyond that. So how that plays out in 2025 is tough to call, but beyond that, we are definitely more positive on Europe than we've been for a while.
Excellent. Well, that's good to hear. Now, looking at the risks, we've already talked a bit about the US and tariffs, but what are the biggest risks to your portfolio? And I'm going to kick off with Jules.
Sure. I mean, we are stock pickers, so as always, the main risk for us is just to pick the wrong stocks. I mean, we know from experience that a large proportion of our long-term performance actually comes from a few exceptional stocks. So if you miss this exceptional stock, then your performance will be average. So that's why as a team, we spend so much time and effort in finding these, what we call hidden gems, that will go up multiple times in the coming years. Now, it's fair to say we also use a very well-established investment process, which uses value, quality, and momentum. The reason we work that way, we use a process, is because it ensures repeatable results. Now, this work over the long term, however, it has one big weakness in the short term, which is when the market is dominated by macroeconomic news rather than company fundamentals, the portfolio tends to struggle. That's what happened in 2022 because the market was focused on inflation and the invasion of Ukraine, and so we underperformed. So we know when the market is dominated by macro news, that's where we struggle. So hopefully a calm macroeconomic world would help us.
That makes a lot of sense. And I like your frankness. The biggest risks are picking the wrong stocks. That's very, very honest. Very good. Marcel, how about you? What are your biggest risks in your portfolio?
Yeah, I mean, similar to Jules, we're bottom-up stock pickers at heart, so I can only echo that, kind of having some stock blow-ups, or even just, for us, it's not just kind of missing the winners, obviously, in MSCI Europe, kind of calling a few of the Novos or the ASMLs or the SAPs badly can really hurt you too. So that's definitely the main issue. Other than that, I would say if I look at this time periods when we've underperformed, if you think about what we're trying to do, we're trying to deliver consistent dividend growth. And the secret in that is the kind of word growth and then also the word dividend. So kind of periods where, growth is kind of not working as well, and particularly given we're a bit more defensively positioned, periods when you have a very sharp value-led rally. So I'm thinking like the vaccine rally back in October 2020. Those are the type of markets where we can struggle to keep up, certainly relative to the benchmark, even though in absolute terms, we would obviously do okay in those environments.
Yeah, I can understand that. And now, George, what's the biggest risk to your portfolio?
It's going to be a very similar answer, I'm afraid, in that from a relative perspective, because we have a very pure kind of dedication to quality and growth companies, we believe that is where the real sort of multi-baggers can come from over the long term within small cap investing. We will underperform if we have a situation where lower quality or value companies do particularly well. But frankly, that's more of a sort of shorter term concern. And over the longer term, it really does come back to that stock picking point. It's picking the wrong companies or missing something in our due diligence that's going to hurt us. And it's for that reason that, of course, we put a lot of resources and a big team behind making sure we're doing our due diligence. And of course, the risk management processes and the diversification at the portfolio construction level, so that even when we do make a mistake, because we do make them and we will make them, it's not the end of the world. We can move on, and we can still allow the rest of the portfolio to do its thing.
I like to hear all about that due diligence process. And I also like fund managers to admit that they're human and they can actually make mistakes, and they do make mistakes because we are all human here. Now, my final question, why should investors consider your trust now? What is your long-term view for your trust? And I am going to kick off with Jules.
Cool. I mean, our long-term view is, again, extremely positive for European small caps. If you look at the past 30 years, all benchmark have delivered outstanding returns. So if you invested 30 years ago in the benchmark, you would have made 10 times your money, which is one of the best performing asset class out there. And the reason for this outperformance is actually very simple. Small companies are able to grow their earnings 2 to 3% faster than large caps. And that makes a huge difference when you compound that over the long term. On top of that, this is an asset class where there are still opportunities for alpha creation. The small cap market segment is very inefficient. There are many stocks that we look at that don't have any research coverage. This means we're still able to find these hidden gems that investors are overlooking, and they can be really exceptional companies. So our daily job is really to find these exceptional stocks. To find these stocks, we use a very established process, very structured. We have used this investment process for more than 30 years now. The trust has been created in the early 90s and has an exceptional track record. So not only are you investing in an exceptional asset class, but you're also investing alongside an experienced team, which has proven to be able to outperform the market.
Thank you so much, Jules. That performance of that index is really strong over 30 years. Marcel, from a larger company's perspective, why should investors consider your trust now? What's your long-term view for European larger companies that you own?
Yeah, so it's interesting if you look also at the 30 years that we've been running the trust, 30 years or so. We've been able to handsomely, by kind of 400 basis points, outperform the index. And something that surprises a lot of viewers is actually our index, the MSCI Europe ex UK, has roughly kept up pace with the world. And so I think the key few points that I would like to make is, firstly, it's not a graveyard index, as you can see, if it kept up pace with the world over the last 30 years. And then secondly, it's actually a great stock picking index. There's much more dispersion, in my humble opinion, between the best companies and the worst companies than you will find in the US, for example, or in many other markets. So if you can find those champions, as we've done over the last 30 years, and 3 and 5 years are healthy too, then it's a great index to be in. And that's usually where I would have kind of ended off my answer. But I think interestingly now is over the last 20-30 years, Europe has been able to keep up pace with the world, despite the fact that European macroeconomy was pretty weak, to put it mildly, over that time period. So keeping up pace with the world with one arm tied behind your back, given that 30% or so of MSCI Europe's revenues come from domestic focus, is pretty good going, and if we get a world where over the next, 5 years, 10 years, let alone 30 years, that 33% comes to the table too, then, I think we could be looking even better, hopefully, over the next 30 years.
Well, that is very exciting and positive to hear. Let's hope that happens over the next 30 years. Now, George, why should investors consider your trust now? What's your long-term feeling? Again, you in European smaller companies.
Yes, well, I mean, we own some really amazing, great businesses. They are resilient, they're profitable, and they're growing. And the best time to own those kind of businesses, or to buy those kind of businesses, is actually when they're slightly out of favor. And if there's one place that's been out of favor for the last few years, it's been small cap, and certainly the quality growth end of that small cap spectrum as well. So we've seen a major derating in small caps. They have underperformed, but predominantly due to a change in their PE multiple, or the price people are willing to pay for them. Now they sit at a double-digit discount to larger companies. They're attracting interest from private equity and indeed trade buyers, as we talked about earlier. And so it sets up a pretty attractive forward outlook in our view. I think specifically to the Montanaro European Smaller Companies Trust, I'd also just highlight a couple of recent board actions whereby the board have taken on a more proactive and aggressive buyback policy, as well as half-yearly tender offers to shareholders, which we hope might help to improve both the liquidity and the stability of the discount.
Thank you so much, George. I'm always very keen to hear what the independent board of directors are doing. Obviously, they're a major advantage of investment trust structure, having that independent board to oversee the fund manager. I'd very much like to thank our managers for joining us today. It's been great to hear their views. I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you are in any doubt, you should talk to a financial advisor. Thank you so much for watching.